Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for June 17, 2020. Today we're taking a look at the USDCAD, the US dollar versus Canadian dollar for today's trade analysis. Now, first, before I begin the chart analysis, it is important to recognize the fact that about an hour from the recording of this video, 8:30 a.m. Eastern US time, some news coming out for Canada, CPI data popping up, and of course some US news as well at 8:30, about 1 hour from now. Low medium impact news, not high impact news, but definitely has the potential to impact this particular currency pair as it affects the dollar and the Canadian dollar. Anyway, as we look at this chart overall, long term, let's go back, a couple of months back to March. This currency pair has been in a downtrend since March. However, in the past few days, past week or so, we've seen a little bit of a chink in the armor for the sellers. We've seen some influence from the buyers in the past week or so. That long blue candle down here at the very bottom of the chart is what I'm talking about. Hit the low down here into the 133s and has rebounded quite a bit back into the 135 level. 135 right around that yellow shade area, 1.35, right around the yellow zone that you see here, and the current market price. A couple of other things here to note on the daily time frame. 200 period simple moving average, a blue line coming in down here. We're sitting just above the 200 period moving average, and if we were to float back to the 100 period moving average, that would be all the way back up here towards this green line. That would be a pretty decent move back into the upper 1.37. So I'm not saying it will, I'm just saying that above the blue line, the potential is it floats back to the 100 period moving average, back up here into near that orange shaded area. Something else to think about: Fibonacci from the lowest low to the current high puts the 50% retracement level right at 135 as well. That's in the yellow zone. That'll be easier to see when we get down to the 4-hour time frame. Red trend line representing the last leg of the downtrend. We're above that. That's very important as well. So a couple of things there. Blue trend line, the blue candle that we saw there several days ago, we've seen about almost a 50% retracement, or maybe even a 618 retracement of that blue candle. Again, right back there to 1.35, which happens to be that significant price handle that we're continuing to talk about, right there at that yellow shaded area. So long-term downtrend, a little bit of a rally here for the buyers, a slide back, and of course a new rally would see a potential new high here. Remember, when you're talking about trends and trend changes and reversals, we're often looking for signs and indicators of reversal. So above the red trend line might be our first indicator of potential reversal. A new higher low would also be an indicator of a potential reversal as well. If we make which we're attempting to make, a higher low. We have the lowest low at the bottom of the chart. The current low is higher than that lower low. So if we are making an uptrend, that's kind of the thing we're looking for. We're looking for a higher low to be made if this is going to be a reversal. Let's take it down here to the 4-hour time frame. And as we get down here, something else I was observing here is this yellow shaded area. Look at the support congestion right over here on the left-hand side. Then, of course, we made the low, and now we're finding support around there again. You might consider that somewhat like a inverted head and shoulders, where we see a low on the left, a low in the middle, a low on the right. So again, if this becomes somewhat like a inverted head and shoulders, we're looking at this area as a the right shoulder level of the head and shoulders. Interesting how it bottoms out down here on the left hand side. We see that one little spike there in the middle, where the black trend line is, right in the middle of that, and then here we are again. So again, I'm looking at that yellow zone as the potential support of that area, which again, right around 1.35. Yellow zone is our place to watch for the day. Either it's going to bounce off it and go up, or it's going to break through it and go down. So that's really kind of the thought process that we have today. Again, Fibonacci from the lowest low down here, close to 133, to our current high, puts the 50% retracement level right at 1.35. So a lot of things rounding up right here into the yellow shaded area: historical support, historical resistance, Fibonacci, potential head and shoulders. We know that daily 200 period moving average sits down here as well. A lot of things ending up right here. So if we see any appreciation, the US dollar goes up, or we see a depreciation of the Canadian dollar. Let's say CPI comes in lower than expected for Canada today, building permits is higher, some positive motivation for the U.S. or negative motivation for the Canadian dollar, would look for this to head back higher. Of course, not too hard to see. The pink zone is your next resistance higher. Beyond that, the blue zone is the next resistance higher, and then of course we have several levels above that if we were to break the last significant high here for the dollar CAD. So for the day today, I'm watching the yellow shaded area as support for the dollar CAD. Potential long opportunity if we get the signal to do so. Buy towards the pink zone and the blue zone. The risk, of course, is a breakdown of the yellow zone for the dollar CAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.